Hey, everybody. Welcome to Beat the Banks from Beacon DeFi. I'm your host, Chris, aka the DeFi Professor. A little late start today. Still trying to, I don't know. I don't know if it's the auroras or something. I just feel like a different energy just taking over me today. Um, well, it's one of those days, right? One of those days where we're having some. There's a lot of bad sentiment on the timeline. One second. I'm just spreading the word out. Hopefully, everyone's doing well. Congrats to everybody on the timeline who is now a registered fast food employee, whether it be from McDonald's or Burger King, Taco Bell. Um, I will say the outfits are a lot flashier these days. Um, I kind of like some of the uniforms. Not saying that I'm applying to Taco Bell or anything like that, but I mean, they pay way better than they did when I was younger. Not to age myself too badly, but I mean, I'm seeing 16, 17 bucks an hour for McDonald's here in my area here in the Midwest. I mean, I don't know. I'm sure they're getting paid in different areas where you are, but man, I remember when you used to pretty much get a hot dog and a handshake when you worked at McDonald's, earning like $4 to $5 an hour. You know, you get those people who are certified biscuit makers or something who just came in for a couple hours a day making biscuits and earning that hard earned wage. Days are different now, but anyway, I didn't realize that I need to come here and fix my screen share. But essentially, we're in a spot where the market has. I'm not gonna say it's puked, right? Wow, Zcash back up to 15%. There's a lot of interesting news coming through specifically about a privacy meta. And that might be one thing in terms of just understanding where the banks are coming from, something you may want to consider moving forward. Anyway, checking on fear and greed. Uh, Earlier today, this was like 14-ish, which is like, ugh. Okay, sorry, that was the stock market. The crypto one is extreme fear. Oh, man. In any case, we get CPI numbers. We got them yesterday, I guess. Um, in an interesting twist, generally, ETH is definitely the lagging indicator, but it's actually not lagging too hard. Still fairly correlated in traveling with Bitcoin, but there is news that the SEC is working to get the market structure bill approved in the U.S., which probably will bring more, just bring more eyes for risk on assets. Well, essentially just have a little bit more clarity. But we're seeing a little bit of an upturn in the last hour, I think, based off of that news. So a lot of people are probably wondering what's kind of caused all of this selling. Well, essentially, the reason why there's been quite a bit of selling, frankly, is off of the news of lack of data, right? Because it should have been, and I think it might have been priced in to a degree that the U.S. government reopening uh, was a bullish event for crypto, right? The market started to rise based off of that. Then a quick sell-off happened uh, once people saw the data and realized that yeah, the data is not looking all that pleasant. In fact, I think a lot of people are just, interestingly enough, we're waiting for enough of a pump to start thinking that they could just start taking profit. And that's fine if that's how people want to interpret that. Um, At this level, and granted, we're back to where we were roughly around, let's call it May, right? If I go back on the monthly chart and I'm like here, yeah, we're not at May, but we're pretty much close to May. April-ish, May, yeah, around that level. A lot of people are seeing, a lot of signals that they feel like that there's a bear market coming. Frankly, we haven't seen any of those indicators come true, if I'm not mistaken. So, what we are seeing is a shakeout of a tremendous degree, with a lot of people taking leverage. And my main worry is that people are taking so much leverage on the long because there are going to be a lot of people just building foundational longs that they're just going to get stomped. Obviously, none of this is financial advice. Where did my screen go? That's never happened. Clearly, they don't want me talking about this. Something. That was weird. Okay. But in any case, one thing that people need to kind of keep track of is the digital asset treasury tracker, right? CryptoTreasuries.app. CoinGecko has a really great article out here that they updated last week on DATCOs. And when I say DATCOs, we talk about them on our TVL podcast, which happens every Wednesday at 1 p.m. Eastern. And what we're talking about specifically are the ability, well, rather, multiple companies creating treasuries within their company that are focused around one, or, well, in essence, one crypto or digital asset. The majority of them in the beginning were Bitcoin, right? We have MicroStrategy, MetaPlanet, and a couple others that are specifically just buying Bitcoin as a strategy. I mean, El Salvador, Norway, Finland, Czech Republic becomes the first in the EU with a $1 million buy or something like that. Just the other day. So we'll talk a little bit about what they are. And if you've never heard of a digital asset treasury company, consider this a bit of an educational day for this. Now, these are technically still DATCOs, crypto mining companies, because they are specifically looking at mining a specific asset. So in a way that kind of makes them a DATCO as well. Now, companies with crypto reserves, this is upside down. That's interesting that CoinGecko got that backwards. Huh. Because this should be down here. That should be up here. Regardless. Companies with crypto reserves, generally they're going to actually hold the asset directly, or they could do it through ETFs. I don't know why a DATCO would do it through ETFs, if just for the exposure. I guess maybe because of the volatility issues there. Who knows? Regardless, a lot of them, like the pure play DATCOs, are raising money through what are called pipe plays, which are private investment in private equity. There are SPAC, or special project type of plays, VC private placements, things like that. They're building these companies with reserves specifically focused on a simple or singular digital asset. Now, if we look at these here on the tracker, you can see there's quite a few of them here. In fact, the one part that I thought was interesting, here it is. If we look at this, the total number of DATCOs and their holdings, since 2020, back in 2020, we had 4. And I couldn't tell you who the 4 were, to be quite honest, but it wasn't until about, let's call it May of this year. Maybe a little bit sooner. All right, sooner. Well, anyway, you can see that there's multiple colors here of different assets, where ETH is actually quite a bit larger. Sol has some roots back to earlier this year as well, with like DFDV and a couple other spots. World Liberty Financial has a DATCO. Don't know who that is. Oh, I know who that is. Just don't remember the name. BNB, of course, same. Even TON has one. Regardless, there's I say that word a lot, clearly. With 76 formed in 2025, in fact, nearly 50 have been formed in the last 3 or 4 months, which is pretty crazy considering the market the way that it is right now. Do you have to worry that stuff like this is a house of cards? And I think the answer is no, but the fact that MicroStrategy officially has an MCAP to NAV ratio under 1 is something a little concerning. But they're always going to be continuing to buy Bitcoin, especially at this level, because their goal is just to have as much Bitcoin as humanly possible. Now, you can have market cap and you can also have the treasury NAV. You can kind of tell who are fairly overexposed and who are not. But this is just for the Bitcoin one. It says 35 here. The number is way larger. That's how many they're just pushing here. But then we also have Ethereum DATCOs, like with Bitmine Immersion Tech, which is from Tom Lee, who came in on July to really just make the idea that they want to own 5% of the global ETH supply. SharpLink Gaming has SBET is doing a pretty big one there too, as well as Ether Machine, 3 of the largest that are available. So that is the second time. What on earth is going on here? Weird. All right, now that's just nuts. Very strange. I don't have to talk with examples, I suppose. But I'm going to say regardless for the 17th time today, there are treasury companies with multiple different things here. So when I look at things, so let's see if I can get this to work for Crypto Bubbles. All right, maybe this will work better. Maybe. We're seeing obviously a pretty red week, fairly okay day. But if we look at the year, if we zoom out, this is something that a lot of people don't do enough of, is zoom out and look at the entire picture. Overall, we are in a fairly interesting spot. I have no idea what AB is. What is AB? It only trades on CEXs, so that's no idea what that is. Oh, is that American Bitcoin? We'll find out. Regardless, damn it, there's that word again. Now, Hype launched in March, so that's to be expected. BNB's had a fantastic rise this year, hitting up to $1,300 specifically. Now, the question that people are going to ask is like, are we at the top? Are we entering a bear market? Honestly, I still don't think so. And the reason for that is US government working really hard to keep a lot of crypto in the forefront as the solution to a lot of problems, right? We have all these DATCOs that are dominating, the category. Granted, they're not a huge number, uh, with the exception of the strategy. But even then, BitMine immersion with 12.9 is still large overall. Seems like the price performance. Well, they've corrected, right? These things will get flatter and flatter, but hopefully up and to the right as things go a little bit further along. I do see that because of all this money flowing in, that there probably won't be a situation where things go sour anytime in the next 3 to 6 months, if you want to call it that. There's a lot of blockchains that I do wonder, are they going to launch in these conditions? Monad specifically next week, are they going to launch in these conditions? Oh, I guess the week after, technically, because the token sale is next week. Aave has a huge announcement on Monday as well that will be very interesting to see and how things go. And we have multiple blockchains on the rise. Mega ETH is coming soon. Like I already mentioned, Monad. We still have Tempo from Stripe. We have Arc, the layer 1 blockchain from Circle for USDC centered stuff. We have Converge, which is Athena's specific one that works with Securitize, which is from BlackRock and all of that RWA type thing. I think that there is a lot of room to grow. Can it all happen with Bitcoin at 95K? That'll be the question that needs to be seen, right? Because in the event that these DATCOs are suddenly taking on water because the price is too volatile, or it starts to slump for even further down to, like, call it 80K, 75, 60K, what happens to these companies? Because Bitcoin is still the tide that leads all ships, whether the tide is rising or the tide is falling, is it not? So in that case, what happens to these companies if Bitcoin continues to slide? Are we going to be in a situation where these share prices are going to fall further and further, and then suddenly we have negative valuations, and suddenly people have to close up shop and go away because their digital asset treasury is now bad? We haven't quite seen the ripple effect from that. No one's really talking specifically about that, but I am curious. In the event that there happens to be some type of global recession, let's say that all the moves that have been happening do not help. Like, I think VIX is also okay. I think the VIX is also a little on the. It's not in a good spot. I mean, I'm not gonna say it's not in a good spot. It's very. Let me find a better chart. It's also pretty. It's down to 12%. So that's the volatility index, and sometimes it can be a little telling, I guess, in terms of how the market could be. Now this call could be short lived, and suddenly somebody says something, and suddenly the markets go racing back up. But for now, ultimately, I don't even think actually I gave my answer, right? I've seen a couple things on the timeline. When the U.S. government was pretty much beelined into going into government shutdown, and once they did shut down, you could definitely say that people kind of wanted to believe what they wanted to believe. Now that the government's reopened, numbers are coming out. I did talk about this. People are a bit upset. People are de-risking. And I think that's a lot of what we're seeing here. Strangely enough, I don't know why they've decided to kind of sell so hard, but we're seeing that, right? We're seeing a lot of people take profits, a lot of people looking to recoup any of the wins that they've made, even though we're kind of where we were back at it, like I mentioned, in May. So I guess the best question for you is, if you're in DeFi, how do you deal with this? And honestly, the question is that for us, because we're staking, we're doing yield farming, we're profiting off the behavior of other investors. We're just grinding out yields, right? That's essentially the play, is to continue to just sit here and just grind out yields. So I'm just trying to pull up anything that'll stay on my screen. Now, granted, these are not the best examples. I don't know why my screen's just been going nuts and just crashing, because that normally doesn't happen, but it is what it is. Let me update. I mean, looking at the rates now, this is very not normal. Same thing here. USD Plus hasn't really been the most relevant. It's a very small TVL as well. But overall, in some of these that are larger markets, anything that I'd really look into, maybe this USDC, USDT on Say. Again, very small market, so not worth the 25%. But overall, this is the one I'm looking at, which is going to be Felix USD and USDT0 on Hybra, which is Hyper EVM, 25% for that. Again, small market. But overall, if you're looking at some of these others, the rates are not terrible, right? You're able to get into these CLM pools. And granted, some of them are not very large, but the ones that are not terrible either. Like this one for this Curve Convex Vault with 11.42 million at 16% is a very interesting vault to be in my personal opinion. Let's just go by TVL. Don't look at that one. I'm just checking to see what's around here that's decent. 36 million. Gauntlet Seamless on base. That's at 6. Is there anything of note that's interesting? I wouldn't touch that. Yeah, I mean anywhere between like 5 and 20% for ones that have held fairly well, which is a good sign, honestly. Now, these rates are going to be fairly compressed because what happens in a world where there's a lot of volatility? People are flying to safety. You have to bear with me. I'm just like. So if we're looking at Camino at their lend, let me bring this up. Yeah, we're looking at, there's a real flight to safety here. These were quite a bit, 3 or 4% higher. But overall, I mean, you're looking at rates that are way higher than what you'll ever get in a bank account, right? 11%, nearly 12 million in deposits in this vault. The Centaur PYUSD has nearly 161 million. USDC Prime from Stakehouse, 266 million. And again, this is 8%, 11%, 11%, roughly, if you round it out. And yes, they're annual rates, but they do also have additional incentives, which is really what's causing the rate to be high. Annoying. That's what this is. So there's a couple of things I wanted to talk about specifically. 3 specific strategies, right? If you're in DeFi, one is concentrated liquidity, where you're playing off the volatility of people trading against 2 assets. That's always a thing to do. You can do that whether you're doing correlated assets, stable coins, or even the majors like ETH USDC, BTC USDC on a very wide price curve could be better than 4% overall. In terms of fees, depending on which blockchain you're on. And then you have the fixed yield stuff, whether it be at places like Pendle, Exponent, places that build on top of Pendle, like PenPy, like Equilibria. Spectra is another one. RateX, I already said Exponent. There are a couple of different spots out there that do fixed rate farming right now, where you're guaranteed a rate if you hold it a specific number of days, like a CD. That's all available as well. So we've got a bunch of different plays that are out there where you can literally uh, get a decent amount of yield. Now, the one thing I did want to point out, and this is something that we talk about all the time, is what specifically is the point of the market where it does make the most sense to do an LP pool. And in general, you're always going to want to do an LP pool, obviously, at the bottom. So, looks like prices are back down. Who knows what's going on now? But now we're down at under 95, specifically for Bitcoin, 3173 on Ethereum. You definitely want to be, you never want to create a liquidity position at the top, right? You always want to do it at the bottom, because then as it rises, especially if you're doing a concentrated liquidity pool that does have either auto rebalancing or auto compounding, you're in a situation where that's going to rise and do well. But the other point I wanted to make here is that hopefully for the majority of you, you're using what we call an all-weather portfolio, which means that you have allocated buckets where you're not over-invested in one thing and it's just your only strategy. Like I get it. There are people out there that are ETH, BTC, Maxi. So they literally have a barbell of, my portfolio is just ETH and just BTC. And if you're just doing that and taking a nap and waking up in 5 years, that's fine. Do you. But for the rest of us who are trying to maximize the number of assets that we have in our portfolios, getting them to work for us, having a situation where you're not over invested in any one protocol, you have multiple plays going on. There are some opportunities out there. Now, I would say probably two things specifically for your portfolio right now. I would say you probably should avoid leverage at all costs, unless it's possibly a stable coin. That would probably be the only one where you probably might not be affected. But if you're doing leverage with like a low market cap stable, I probably would not do that right now. You probably want to stick with one of the larger majors that are well above, 5 billion market cap or something like that. Trying to think, what are my options for stables? What are the options for stables specifically? Let's see, categories. And I apologize, guys. I am trying to find a reason as to why my browser keeps crashing in terms of sharing that. But let me see if I can find. I'd like a stable coin, specifically a stable coin category, just to kind of see what are the that's not it. But regardless, staking in high volume protocols, delta neutral farming may not also be the right call here either, because of how volatile things are. We could have violent swings in either direction, and delta neutral or even pseudo delta neutral is better off in a fairly predictable sideways crab-like market. We're not getting that right now. So PDN and just regular DN probably not the move either. So that's why the rate compression is happening on stablecoins. We're just seeing a lot of people doing flights to safety. And there are multiple places that you can do stablecoin LPs that are concentrated liquidity, both automated and manual. I would say for most people, if you're looking for your first stablecoin LP, do an automatic one. Go to Beefy Finance, or I can't say they're just called Beefy. Just go to Beefy and try that, because they have their concentrated liquidity module, their CLM, and it works. It's fantastic. It's better specifically for long assets if you're long on a specific asset, but with regards to stable coins, you should be fine there, right? You can also do some correlated assets, especially if it's an asset that is on the way to possibly appreciating. I think For example, I think Hype could be an interesting play here. Hype is something that we've been bullish on quite a bit for quite some time. Hyperliquid overall, Hyper EVM. So doing a correlated pool, with Hype and all right. Now I'm just annoyed as to why that keeps dying. Let me see if I can, because that's on Brave. Maybe if I, that doesn't matter anymore. Just be careful out there is my point. Thanks to retake.tv, by the way. And everybody who's chatting and then sending in some well wishes. We should be, like I said, DeFi is going to be fine, right? As long as you're not out there trading perps at 1001x and just kind of going crazy. And again, if you're doing that and you're doing okay, that's fine too, right? Depending on which it is, you're looking to specifically try and farm as much for airdrops as possible. I kind of covered it in my personal stream yesterday specifically, but there's a lot of metas, and we talked about this last week because we talked about painting the picture, right? What are the big metas that are happening right now? It's prediction markets, perp dexes, crypto AI, DeFi AI, or DeFi, DEFAI, AI agents, that type of thing. And now we seemingly kind of stumbled into a privacy meta, which I think is kind of crazy. It's fun because there's so many people who gave 0 Fs about Zcash not that long ago, and suddenly everybody is talking about Zcash like it's the ultimate hedge against Bitcoin. I heard that today and I was like, what are we doing here? What are we doing here? Let me see if I can actually get the shill to go. There we go. Anyway, if you like what you're hearing, you want to learn more, you want to figure out how to get into decentralized finance, how to start beating the banks by being your own bank. Have your assets work for you. You can join our free group, Total Value Locked, from Beacon DeFi. School.com/Beacon, completely free to join. If you want to get one-on-one mentorship with me, check out some of our paid offerings. We have those as well. Join the best of the best that are available in DeFi through our content. Shout out to all of our founding members at the Beacon Mastermind, our Beacon Mastermind members, and our Beacon Challenge members for helping making what we do possible. So again, want to join the group, feel free to do so. We do this training every Friday, 3 p.m. Eastern for Beat the Banks. And again, the whole point is to make people aware of your options. If you are just sitting around farming your own paycheck in a savings account, you are losing money, guys. You are absolutely losing money. Thanks to inflation, thanks to crazy economic policies, you want to be in a situation, regardless of what country you live in, to be into assets that are anti-fragile and censorship resistant, and you can find that in the world of decentralized finance through a myriad of stablecoin assets, through a myriad of regular digital assets, whether it be ETH, or if you actually want to get into Bitcoin or Zcash, XRP, ADA, whatever you want to get into, Cardano even. I just said ADA. Or Crypto.com, the Crow coin. They've seemingly done fairly well for themselves so far in this run of the cycle. Now, what I've been telling everybody in our groups is, you just have to stay defensive. Ultimately, people ask me all the time, Chris, how do I make money in DeFi? The answer is very, very simple. You don't lose money. Don't lose money and you're making money. Why? Because we are in yield-bearing positions. We are doing yield farming. We are benefiting off the behavior of other investors. We are grinding out these auto-compounding yields that compound daily, by the way, to build snowballs of wealth that we can take with us because we own our own assets here in DeFi. It's self-custody. That's the most beautiful thing about it all. So, definitely watch, definitely see what's going to be happening moving forward. Outside of that, it's been a fairly slow news week. There's been a lot of partnerships with Polymarket. They partnered with TKO, which is the umbrella company for both the UFC and the WWE. So sports are getting an injection of prediction markets. Yahoo Finance has partnered with Polymarket. Google is partnered with Polymarket and Kalshi, the two largest prediction markets out there. And like I mentioned last week and even yesterday on the personal stream I did, it's just very weird to see this all happening. And I only say that because who knew that a voting app would point to quote unquote factual data that companies can use? And I get it. It's a way to enrich data, right? And I talked about this yesterday. Think about groups like Quinnipiac and some of these other pollster groups that literally go and call people and just ask them their thoughts on specific things. Now they're going to continue to be relevant. Gallup, right? Gallup and other companies like them. There goes again. They're going to continue. But the fact that Polymarket has found a way to kind of be a part of the fabric of most of these companies now is frankly surreal. It's still technically a Polygon-based project, by the way. They started on Polygon, 4 years ago at this point, but they didn't really command a bunch of TVL until, 10 months before the US presidential election last year. And now, in the month of October, Polymarket and Kalshi together did more volume in that 1 month than Polymarket has been in existence combined. So people are taking notice. What does this mean overall for DeFi? Not a whole lot yet. When we're in a position where these tokenized, or rather these markets, these prediction markets can become tokenized, and then you can do different things with them that is somewhat DeFi-ish through like using picks and shovels that we would normally use, then that's a bit different. I'm waiting for someone to do covered calls on some of this stuff, right? And then putting them out there for, the payment that could possibly be done within like 6 months of the actual date happening. I don't know. There's a bunch of things that people can do. They're already building prediction fi is what they're calling it already. AI-based things using payment rails like X402 and stuff like that to help build new mechanisms and new ways to monetize. And I say that because I was talking to somebody this morning about it specifically. They said that, they're learning a ton with our content, but it's just so much. And that's true. There's just so much in decentralized finance in terms of figuring out multiple ways that you can earn fantastic yield and return on your money. You're not going to find that anywhere else in in traditional finance, right? Because you're going to need access to a financial advisor for most of it. And they're going to charge you for that. You're not the one making the most money in those transactions. They are, right? So in a world that where you get to be your own bank, you're self-custodying your assets, you're responsible for multiple things, not only just the knowledge and keeping up with things, but the monitoring, the security, and all of that. And it may not be for everyone. That's perfectly fine. But for those who believe in a real future for controlling your finances, there's no greater financial freedom than being in this space, guys. Oh, man. I keep looking at the market and I just keep trying to understand, why are people selling? And I get it. You're trying to... All right, we're back up above 95. Cardano at 50 cents, still being the worst stable coin out there. XRP at 226. Their chart looks, man. I mean, Solana losing 140. That's, we call it the people's blockchain, but man, what are all the people doing? With that said, volume, get everything back up, we're fine. Anyway, like I said, not fairly slow news cycle this week. For me, it was really just about kind of, the title of it is why everyone's selling. Ultimately, if you're trying to get into this space or you're kind of freaked out by everything that's happening in the space, frankly, don't be. This is frankly par for the course. Is there a chance that this bear market is worse? Yes, absolutely. And the reason for that being is that we have all of these digital asset treasury companies like I was covering in the beginning. Could it be a tremendously hard landing for a bunch of investors who possibly could lose everything in this case because they went in on one asset and they formed an entire company around it? Yeah, we could see some of that. And the contagion from that, assuming they don't do anything stupid with the debt or with the coin, the treasury itself, just let the coin sit. Please don't start doing some type of tokenization dark pool stuff on the side. That's a bad idea. Don't do that. It's all built on the idea that these coins are going to continue to grow up and to the right, and for them to have strategies to help earn additional yield back for their holders. That's the goal. That's the hope, and we're still building on that. The way that decentralized finance and blockchain investing looks right now could be vastly different in 6 months. Like I said, we have multiple blockchains coming through. For the first time in a while, I mean, granted, this is a very limited view, we're going to have a lot more alternative layer one blockchains in the system, really just trying to pull as much capital rotation between all of them. And this is going to be a very interesting fight, in my opinion, in Q1 of 2026, because we're going to have Tempo from Stripe, Arc from Circle, Monad, Mega ETH. I know I'm missing some. And, 4 or 5 other chains. And that's just the L1s. We've got layer 2s coming up from everywhere. We have Aztec, which is a security layer 2 rollup. Starknet is trying to have a layer 2 built for Zcash. That's what Cypherpunk, which is from the Winklevoss twins and them, are trying to build and create Catalyst and ecosystem for. It's interesting they call themselves Cypherpunk, to be quite honest, because it's quite the corporate move, very centralized. But it is what it is, right? Hopefully them throwing the gauntlet down will supercharge developers from around the space to kind of come together and kind of be the anti-establishment founding block for, let's just call it Zcash, right? I think it was Balaji who's out there in Forest City outside of Singapore, Malaysia, with the network state. He said that up to 2017 was the proof of work era, specifically for crypto. 2017 to 2025 was the programmability era, where we saw a lot more digital assets. Probably, hopefully, the death of CBDCs and more of the decentralized, stables and all of this stuff, which frankly are not truly crypto coins, right? Because many of these coins are derivative assets. They're pegged to a value of something else. And then from 2025 till whenever is now the privacy meta. Interesting to see how a lot of this is going to blend together with so much noise and interference running in the front, like with prediction markets, with AI, with all kinds of groups building different types of apps, trying to bring the next million people into DeFi, or for the last 3 years, bringing every institution known to man down into DeFi, as they're testing. And they've been testing, guys. If you guys don't think that JP Morgan, Bank of America, Goldman Sachs, all of the Microsoft, all of those companies have been testing, even Google, for the last 2 to 3 years on blockchain tech. Biggest people in the world, Walmart, Amazon, bunch of other people, PayPal, have been working on blockchain tech for a very long time. So the legitimacy to blockchains and crypto is there. It's all up to you now to come out and explore it and find out how you can turn most of that into something that's advantageous for you and your capital. because it's all about your return on your capital, return on your investment, return on your equity. And that's what we're here to help you with. So again, school.com/beacon if you want to give that a try. And ultimately, come and check us out. You can learn more about what we do, learn more about the DeFi savings account, the DeFi CD, or the DeFi investment club accounts that we have, and how you can set one up for yourself. Because in this world, we're all about self-custody. None of this is financial advice. Do your own research with all of this, of course. 1 second. Allergies. Like I said, we've been doing this show every week since January of 2022. Beat the Banks has been around. So I've been hosting this for quite some time. And the goal is the same: to educate, to onboard, to get more people into decentralized finance. If you're out there being a trencher, trying to work your way to your first 7-figure bag, good luck, congrats. Farm your profits, please, because you're going to have to pay taxes, and you shouldn't be over invested in one project anyway. Learn all of that. Come to me. I will help you. See you next Friday at 3 p.m. Eastern for Beat the Banks. And have a wonderful weekend. Stay safe. Don't take a ton of leverage. And be secure. This is your money. Keep beating those banks. Beacons up. Banks down. Take care, everybody. Have a great day.